it's Eric with Jazz Wealth Managers, where we don't like to just invest your dough. We like to educate you on your dough. Today, I've got a really cool, crazy strategy. Sometimes when I'm talking to clients, my brain gets a little geeky and I start coming up with all these different ideas. So I don't know what we'll call this. Maybe we'll call this the Eric Jazzy method. But throw me a comment down below. Let me know what you think maybe we could call this thing. But the idea is I've got a really cool strategy that I want to show you. So let's go over to the handy dandy board. So the first thing is you have to have an individual account. This could also be a joint account, or it could be called a brokerage account or a taxable account. These could go all different ways. But in the end, all of these accounts, the way they work is they're actually taxed at either short or long-term cap gains. So that's what you've got in here. It's either at what, 15% or 20%. Those are generally how those are taxed. But sometimes, like in a down market, like right this second, what ends up happening is you may end up having a loss. Well, if you've got a loss in your account, let's just say that you have a loss of $21,000 currently in your account. Well, guess what? You can't take the whole loss at one time. You can only take $3,000 per year currently. Now, that's okay though, because what I'm going to show you is a strategy to be able to take full advantage of this. Now, be sure to stay till the very end because I want to throw in a bonus, which isn't really a bonus, but it's something that if you haven't already jumped in the comments and said, no, this isn't going to work because of something, I'm going to teach you how it will work. So that being said, all right, let's just say that you make $100,000 a year. You have an account that's an individual account that has, let's say, $100,000 in your individual account. And we're going to say you have the $21,000 in loss, but unfortunately, you can't take the full loss in 1 year. You can only take $3,000. So we're going to have a $3,000 loss right here. You can do this for the next 7 years and carry this over whatever is remaining. So right here, we're going to take this $100,000 that you're making. We're going to subtract $3,000. So now it's going to show that you made $97,000. Awesome. You got a little tax break there. It's only going to show that you had made $97,000. But over here, you've got a traditional IRA and you've really been wanting to do some Roth conversions. To make this super easy, we're going to say that this is $21,000 in this account. Well, if you take this over here and we're going to open up a Roth IRA, same year that you want to do this, you're going to convert $3,000. Well, now, yes, you didn't get the full tax break here because it's not going to show now you made 97. It's going to actually show you made that $3,000 back with the Roth conversion. So you're still going to make the $100,000. But guess what? We've got a wash right here. If I can get my $100,000 right, you've got a wash because you've got $3,000 in a loss. You've got $3,000 in income. We just converted that $3,000. Now, here's the thing that I was going to tell you because some people are like, well, what about the wash sale rule? That's what I want to show you. So with a wash sale rule, so the way this works is you have to be very careful with this entire strategy. We've got people who are moving money in, and let's just say that the money is coming in an ETF. Well, oftentimes we're building out a portfolio of stocks. So the way that would work is you have 31 days with a wash sale rule that basically you can't keep it in the same account. So let's just say this. Let's say, or you can't buy the same thing. So if you bought SPY, you can't sell it and rebuy it, or even buy something like a VOO, which is the Vanguard S&P 500 index. You can't buy something like the other one, or if you do, then basically you've messed up your whole tax loss. You can't do that, where that's going to fall into that wash sale rule. But what you can do is, let's just say you sold off SPY and now you've bought a portfolio of stocks. So you can do the stocks. Or, you know what else you could do? You could go over here and you could buy, let's say, what is the Vanguard total index? What is that one? I think that's, is it VTI? I believe it's VTI. So you could buy something like that. You could buy different things, you just can't buy the direct thing. So you've got to be very careful when it comes to the wash sale rule, but there are strategies to be able to work around that. But that's just one crazy strategy that I worked with, that I saw on a client's portfolio that I thought would be a great idea to present. Again, let me know in the comments below what I should name this thing. Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.